Yo, what's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. As you can see right now, the investing portfolio is $59,648. We got $142.20 down in the buying power. Okay, on yesterday, I'm going to go ahead and tell you. Yesterday, I was going to make a video about how great the market was doing, and for the last 2 days, how the market has been bouncing back. But all of a sudden, if you guys was paying attention yesterday, and even this morning in the pre-market, 47 came out yesterday and made an announcement. Well, first of all, if you've been paying attention to the market, you see that the market tanked yesterday evening, especially in the aftermarket. You're seeing a lot of red come up. And what happened when we went from all that green for 2 days, where we made positive gains and positive impact, and all of a sudden we went to a sea of red again? Well, yesterday about 4 o'clock, 47 came out. He made an announcement that he will be continuing with the tariffs for April the 2nd. The full rollout, that is, the full rollout of the tariffs. He will continue proceeding with those. And that causes the market to sell off, just like we've seen so many times before. Now, for me, what does that mean for us people that are trying to build wealth? Well, for me and for you, that just simply means lower stock prices, more opportunity to build wealth. I've told you guys, and if you're new to the channel, I hope you guys understand this, that your wealth is built in the red days. Your wealth is collected in the green days. So when you see the red in your favorite ETFs and favorite stocks, then that's the time to buy. Now, this is not financial advice. I don't have a Series 6 or a Series 7, but I'm just telling you, if you want to build true wealth, and if you want to do this investing thing the right way, then take my word for it, because I've been investing for a while. I'm just a guy on YouTube, but I have showed before and after results. I have showed my portfolio like I'm showing now, and I actually get results. So guys, that's all I'm saying. Wealth is built in the red, wealth is collected in the green. Now, one of my favorite stocks, Walmart, sitting at $85.34. In the pre-market, we was up 0.15%. Walmart has a dividend paying out coming up April the 7th, as you can see. My position, I got 112.52 shares of Walmart, looking to get more. Market value is $9,602.53. Average price is $58.46. Right now, I have a total return of over $3,024.56, or a 45.98% return. This is amazing growth for this company. But the thing about it is, they're not even a growth company. They're still a value style company. But the growth has been exponential. And I've been dollar cost averaging into Walmart for about, consistently, that is, for about the last 3 years. Yeah. I haven't sold my shares in Walmart in about 3 years. But when I used to work for the company, I worked there 8 years. I've always been investing for the whole 8 years. But every year, I would take my stocks out like around Christmas or birthdays or whatever, and I would use it to buy presents or other crazy, meaningless stuff. But now, since I learned the power of true compound interest and the power of investing, I leave that money in there and let it roll over year after year. And you can see why I have such a smaller, I got off of it. You can see why I have such a smaller average cost. It's right there at $58.46. So yeah, I've been in this stock invested consistently since they had a stock split and everything. So it continues to grow. The next investment I want to talk to you guys about is SPLG. It's my ETF for the S&P 500. Right now, the price is at $67.14. I got 237.17 shares of SPLG. Market value is $15,924.07. Average cost $64.35. That makes up about 26.76% of my portfolio. So about 1/4, a little over 1/4 of my portfolio is in the S&P 500. Those are the top 500 companies in America. And so I'm well diversified. You know, a lot of people talk about being diversified in the market. Don't have all your eggs in one basket. If one sector goes down, another sector may be doing well. Well, that's what I have right here with SPLG. My total return, $661.52, or 4.33% return. Now, you might ask me and say, well, don't, KJ, I thought the S&P usually give you between a 7 and 10% return. Well, it does on average for the last umpteen years, however many years. But what's going on right now, like I said, has been talks of tariffs. 47 came back out. And like I said, the last 2 days, the market has been doing great. S&P is a reflection of the market. The S&P was doing great, but it never did reach the highs that it fell from back in February 19th to be exact, is when my portfolio peaked. Let me see. Let me do a year to date. See? Now, if you take it back about February, right here, February 19th, the S&P or SPLG was at $72.10. We're all the way down to $67.14 right now. So when this thing was peaking back on February 19th, when the whole market was back up, you know, at the all-time highs, man, this portfolio looked a lot different and looked a lot better. But we just got to get back to those levels. The next ETF I'm going to be using to help become financially free, millionaire status, it's going to be LTEC. LTEC is my Fidelity Information Technology Index ETF. Right now, the price is at $167.51. I actually just bought some more FTEC yesterday. We're down right now $4.15 in the market. Now I have 18.55 shares of FTEC. We're looking to buy more every day, every time I get paid anyway. Market value is $3,108.43. Average cost is $172.61. Now, my average cost used to be $173, but because I bought yesterday when FTEC was down in the 160s, that allowed that average cost to drop down as well. Right now, total return is a negative $94.58. And the reason it's a negative is because my average cost is still $172, but the actual price is $167. That means you're trading. That means your money is taking a slight loss. But with the stock market, the beautiful thing is you never really lose unless you sell. So we're not going to sell. This portfolio is a buy and hold long term. So that's what we're going to continue to do. I think FTC got about 290 different stocks in it, technology stocks, technology funds. So, yeah, it'll bounce back. Don't worry. Next up, we got Meta. Meta Platforms. You know, Facebook right now is trading at $609.57, which is a bargain. It's on sale. Meta has a dividend paying out here March 26th, and it got reinvested. So I got 2.53 shares of Meta. Market value is $1,544.93. My average cost for it was $509.94. So I'm up right now, a positive return total of $252.51, which is a 19.54% return. Last year, guys, Meta was, like I said, back before February 19th, 2025, everything was at its highest highs. Meta had, last year just had a 55 or 53% return on the money. So Meta Platforms is a company that's busting. It's a company that's busting. So what else we got here? We got Alphabet Class A sitting at $165.33. I got 12.73 shares of Alphabet Class A. If you don't know, Alphabet is the parent company to Google. Class A just means you got voters' rights. Class C means you don't have the voters' rights. but I own both parts of the stock. Market value is $2,104.65. Average cost is $144.37. And right now my total return is $266.79 or a 14.52% return. Guys, anything over 8%, we're getting rich. We're going to continue the dollar cost average into this stock as well. Just like we did for Meta, we're going to do it for Google. Going to continue the dollar cost average in. And here is the Alphabet Class C, 167.40. I got 4.92 shares of that, $825.08. Average cost of 180.17. So right now I'm taking a slight loss because my average cost is so high. It's $62.93 in the hole. But it's okay because, like I said, you can, while it's low like this, take advantage of the dip. And once you buy, for you new investors, once you buy and the price is actually lower than what your average price is, you want to get that average cost to drop, buy the stock while it's lower than your average cost. And you'll start seeing that thing drop and your overall profits will increase. Then you got Amazon trading at $200.85, which is on sale, which is a bargain. I got 3.93 shares of Amazon, continue the dollar cost average in that. Market value is $789.93. Average cost is $167.48. I'm up total 131.25 or 19.93%. Amazon is another banger of a company, a part of the Mag 7, just like Google, Alphabet, just like Meta, just like any other of the Mag 7, Amazon. And I feel like what sets them apart is their AI computing. They have a good grip in AI right now. They're spending like upwards of multi-billions of dollars on NVIDIA chips and GPUs, things like that, to help the company run and operate. And they're trying to make sure that they're first in line to get these AI capabilities in their computer bases and things like that. So, yeah, Amazon, man, taking full advantage of the market right now. Yeah, there you see, you got Microsoft. I got 3.71 shares of Microsoft, $390 a share. That's a bargain. You guys should, just check on stuff like that. These companies, man, I'm telling you, the Mag 7 is helping me get to wealth. The traditional IRA sitting at $40,254.82. We're down $202 for right now, but that's just because of the market and the tariff talk. Now, buying power is $2,082.45. How did I get it? Because I sold 200 shares of Luminar Technology, guys. That's another thing I wanted to talk to you guys about. Luminar Technology, just the other day, last Friday, as a matter of fact, a week ago, finally reached $8.35, and I put in a stock price sale to go ahead and sell 200 shares of that stock of that company that I own, and I did. And I sold the 200 shares, and it gave me a return of like over $1,700, something like that I made. So that got added to my buying power, and there you go. I still got that money in there to this day. Right here, we got some more Palantir. I bought some more Palantir just yesterday. Palantir trading at $91.42 right now, on sale. I got 26.79 shares of Palantir, and I'm looking to buy more. I believe Palantir is one of those companies that's going to help me reach financial freedom and the goals that I want out of life. Market value is $2,449.22. Average cost, $75.94. I'm up total return, $414.46, or a 20.36% return on investment. I'm telling you, man, a lot of people hate when the market goes down, but I'm here to let you know, when it's red, that's when you buy. When it's green, that's when you collect. Right now, the account sitting at $99,893.65. Not bad, considering how down the market is. This account, like I said, at the highest peak of it was back at 109,000, and yeah, 109,000. I can't remember the rest of the numbers that was on there. But anyway, I just participated last night in the Robinhood Gold presentation. They got the 3 different They got the 3 different attributes coming out on Robinhood for the Robinhood Gold members, as far as like setting you up a team in order. The best investors have like a financial team that works beside them and works with them, managing their money. And so they were showing us these clips last night of how they're getting ready to set up Robinhood Gold members to have a financial team. Some will be automated through AI, and then some will be actually monitored by real humans. I thought that was pretty cool. If you have any comments, questions, concerns, drop them down below in the comment box below. I try to get you guys the most accurate videos as quick as I possibly can. Yesterday, like I said, I almost put out a video telling you that everything was looking so great in the market, which it was at the beginning. And then 47 came out with those comments about those tariffs, man. And he's rolling out the full effect by April the 2nd. So we got to be ready. We got to be put in place. You guys, excuse me, get your finances ready, get your money. You might want to be on the sideline right now if you want to. I understand, until you see what the tariffs fully does with the market. Now, is he just bluffing again? I don't know. Is he telling the truth? I don't know. But whichever he does, we got to be ready to take advantage of the market, okay? So get down there in the comment box below. Leave comments, questions, concerns about anything you got for me. I'm going to answer it. Continue doing what you're doing. Dollar cost average in. That's still proven method, proven strategy to be the best strategy for investors, especially when we're trying to build wealth in an uncertain economy. So, excuse me. Let that be a lesson to us. All right, guys. Until next time, this is Katie the Investor signing off. Over and out. Peace.